Hello, everybody. Thank you for watching The Naturalist Capitalist. I am your host, Reed Coverdale, as always, and I've got my good friend Mike back on the show. Where are you right now, Mike?
I am in Nebraska.
Nice. Sweet. Hitting any serious weather out there, or is it pretty clear sailing so far?
It's cold. It's not snowing right now, but I don't know. It might snow the next couple days. We'll see. Hopefully, I'll be headed back east by the time the weather hits.
There you go. So we've been friends for a little over a year now, and we've always been interested in the markets and gold and silver and things like that. We've talked, you and I, in our personal messaging, we talk mostly about those sorts of things, but this is more your wheelhouse than mine. So I wanted to have you on to talk about everything that was going on this week. So I'm sure everyone's heard a little bit about it, but basically what happened is there were a bunch of hedge funds that were trying to short the stocks on GameStop. And some people on Reddit saw the writing on the wall for this. So they got, I don't know what the exact number of people is, but they got a ton of people to invest in GameStop stocks. And they started flipping the market in the other direction and terrifying all these hedge funds. And then you saw a lot of manipulation from the apps, not letting people buy stocks anymore, all sorts of stuff going on. So why don't you just lay out what you saw happen, what you think about GameStop in that situation?
All right. Well, full disclosure, I do not own any stock in GameStop. I didn't play this trade at all. I am exposed to, a few trades with Peter Schiff and let me step back. I'm a mutual fund holder of Peter Schiff, and most of my knowledge of marketing comes from him. I've been a follower of his podcast for several years now. And I'm just kind of a small time investor. I'm not a huge hedge fund or anything.
Right.
But so what happened, as I understand it, was GameStop was there was a post on a Reddit group called Wall Street Bets, and they talked about how options expiration for GameStop is coming up just yesterday on Friday, and there's 140% of shorts for the number of shares that are outstanding. So the plan is, if you're shorting a stock, you buy it with the intent that the price is going to be lower when you buy to cover it, or when your option expires, than what it is today. So if, say, the stock's at 15 and you're expecting it to go down to 12 by the time your option expires, or you would make a $3 profit off of that, because you're basically borrowing money to run this purchase through. If it goes the other way, you lose money, because you have to basically come up with the money that it would take to cover the cost of that share to settle the trade, because you're basically selling shares, in the name of the company that are not necessarily yours.
Right.
So what happened was this group, they noted that, and they said, okay, all you need to do is buy the stock and hold it through Friday, and then when all these hedge funds try to cover, you can put limit sale orders of any price you want, and they have to buy it back, because this is the day that their options expire, and they don't have any choice in this matter, because that's the way these trades work. And the price jumped substantially. It went up around $500. A couple days prior, it was only down in the $10 to $12 range, I believe. And there's been a substantial amount of volatility ever since. I believe one of the things that happened You know, if the price gets up to $500, nothing stops these hedge funds from saying, okay, well, I'm already upside down in this trade. I can average down my price by saying, okay, I'm going to short it right now here at 500 and then ride it back down to 200 or 300 to recover some of my loss. But their back is still against the wall. There's, you know, if you're losing that substantial amount of money, it's hard to recover, you know, enough to average it out. So, you know, now the stock is substantially higher than it was a week ago, basically, and it's probably not going to go anywhere for a while. GameStop they've been against the ropes for a couple of years now. They're not making, you know, especially due to COVID, they had to shut down a lot of stores. They're moving a lot of their retail business online, but they're not making a substantial amount of money. And you know, hedge funds would come out and say, okay, well, we're going to short these stocks because we're just going to assume they're going to go to zero someday when they go bankrupt. And,
Right.
you know, nobody, I mean, I don't think these hedge funds expected it to pop up on Reddit and then suddenly all these small time players come in and ruin their plans. You know, I think I heard an estimate that one of the hedge funds was losing like $7 billion because of all this being on the wrong side of this trade. And there were a couple other stocks that were associated with it too. I think Bed Bath and Beyond. I think there was also AMC movie theaters. You know, there were a couple other stocks that were associated with it. And, you know, I find it really interesting being on the sidelines. You know, there was a separate post that I want to talk about in a little while, but more related to silver. But I don't know. Do you have any more questions related to this GameStop thing?
Yeah, what was hilarious is everyone calling this market manipulation, but you know, all the bailouts and everything that happens to the top 1%, that doesn't count as manipulation. It's only when
Right.
you have a group of people on the bottom get together and strike back against the oligarchs. And you're already seeing calls that these hedge funds might need a bailout. It's just like, what? I mean, it's just so ridiculous. And the other thing I saw is I forget who it was, but one of the guys related to one of these hedge funds, he was literally crying on television, talking about how it's unfair that, you know, the government was giving out these $600 stimulus checks and now all these people are banding together and taking on the rich, and that, you know, we need to all work together in this. This isn't fair. And I'm just like, what the fuck are you talking about? Like, I mean, it's almost like they want a revolution to happen. So what are your thoughts on that?
Well, I don't know. I don't know what the political implications of this are. You know, I still like that. You know, there's a lot of people who are sitting on retirement funds right now, and that's their, you know, their nest egg that they're going to live the last 20 years of their life on, or, you know, something like that. The younger crowd, the millennials, seem to be more hip with things like Robinhood and, you know, these apps on your phone where you do all your trading. And, you know, so, you know, it's almost like there's there's different demographics here that are all playing different games. You know, most of the hedge funds, I don't think there's very many young folks in that game.
Right.
You know, but they have advantages. I mean, I think we were discussing earlier that Robinhood itself is related to a hedge fund called Citadel. I think you were mentioning.
Yep. Yeah. So Citadel is a hedge fund that owns Melvin Capital Management, and Citadel banned the purchases of new GME shares on Robinhood, and the the former Federal Reserve Chair, who was Ben Bernanke during the financial collapse in 2008. He's currently Citadel's senior advisor. So there's a lot of connection going on here, and Robinhood's being sued for billions of dollars right now for not allowing purchases of stocks. And I haven't read all of Robinhood's fine print. I
Yeah.
don't know if they've got a stipulation that covers them in this instance, but they were definitely protecting the hedge funds
Right.
because they were obviously losing money, and then the apps. It wasn't just Robinhood; it was other apps too that were just shutting down the purchase of any of these stocks anymore. So there's a
Right.
huge investigation going on. But if they did do something illegal, it's likely that nothing will happen because of the people who are on the boards of these companies. They are connected with powerful people in the government. So if there was
Yeah.
any injustice, it might not be corrected.
Yeah. Well, a lot. It kind of depends on the the um. So a lot of this has to do with the business model of Robinhood. When Robinhood came around, you used prior to Robinhood coming around, you used to, pay your stockbroker for the privilege of trading in the market. So you'd have a commission on every sale that you made. Um, Now things are moving in a different direction. They make money selling trade information to the hedge funds, or allowing algorithms to front run trades to, you know, get a jump on, purchases, and probably make a cut off of every trade that way, rather than paying directly a commission for each trade. So, a lot of this, there's a lot of handshaking going on between Robinhood and the hedge fund that probably established it.
Right.
So it kind of makes sense that if the hedge fund says, "Oh man, you got to stop this GameStop stuff," you know, Robinhood would oblige them, because that's where their bread is buttered, so to speak.
Right.
They're kind of they're they're using the small time investor as a means to make money and make rents off of, because these hedge funds require volume, and they need, to know what other people are doing in order to front run trades and bet against them. And there's a lot of things that they can do to say, okay, I see that Robinhood is having a ton of interest in GameStop. I'm gonna throw us a couple options on, because I'm assuming the price is gonna go higher than it is today. So they can do stuff like that and use the information from Robinhood as, to see what investors are doing.
Right.
It's kind of a clearinghouse for information that helps them read the market, so to speak. So, um, but yeah, I don't know where I was going with that. So let's see. You want to talk about silver? Is that our?
Yeah. Yeah. I mean, we're both invested in silver, so that's
Yeah,
been a heavily manipulated market. Why don't you talk about the futures for that?
sure. So one of the corresponding posts on this Reddit group also had a talk about silver and how to front run a trade very similar to what they did with GameStop. I've listened to a couple different quote unquote experts talking about the silver market, and I've been following it for a little while. And the fact is, JP Morgan Chase has a very large short on silver. In many ways, what Robinhood is trying to do is to try to squeeze them on that. The inherent problem with the way they're doing it is, it just so happens that the iShares ETF SLV, which is how they're playing it, is run by none other than JP Morgan Chase as their custodian. So basically, you're giving money to JP Morgan saying, okay, I'm giving you this money so you can run up the price of silver, and put money into the fund. And JP Morgan says, okay, I'll take your money and I'll let the price go up accordingly, or not, because they can it's a fiat. Basically, they can create more shares of stock anytime they kind of in charge of this fund. And of these ETFs to try to redeem for physical silver doesn't, it's a very muddy thing, and most, there'd be long waits, and you'd need to have a certain amount. I think it's like 50,000 shares, which is an insane amount of silver to try to get delivery. For a small scale investor, it's almost like you're giving, in many ways, the creation of this ETF happened after Warren Buffett tried to corner the silver market in 1998 or 96, I think it was. And they okay, well, rather than having everyone try to invest in physical silver, we'll come up with these ETFs, and we can front run trades, we can option down, we can create paper silver so that we can manipulate the price. And that's been JP Morgan's game for several years. I believe they inherited a large short position from when they went under, and back when Lehman Brothers and everything fell apart in 2008, and there was a long investigation in trying to figure out if they had done anything illegal. And I'll make reference to a book called The Big Silver Short by Chris Marcus. If you want to know the details about all of this, it's described in great detail in that book. Chris Marcus does an excellent job of breaking it down. He runs a channel on YouTube called Arcadia Economics and talks a lot about silver and all the different aspects of investing in it, and how to deal with investing in a commodity that routinely gets the price knocked down because of spoofing the market and front running trades and moving. If you purchase a stock and you run what's called a stop loss underneath the market, so say you bought it at 12, you assume it's going to go to 15, but rather than take more than a 20% loss, you run a stop loss of $10 underneath it. So if a custodian like JP Morgan says, okay, well, I'm going to run the price down to $10, knowing that there's going to be a whole lot of selling action and that'll drop the price down, and they can bump a whole bunch of people out of the market by doing that. Technically, that's not legal, but it's been going on for a very long time. And if you're JP Morgan Chase and you are, one of the banks in the country, too big to fail, and on the back, and you had bailouts back in 2008 when everything was, the world was falling apart, and, you can get away with stuff like that, I guess.
Right. So how should people invest right now? What's the smart thing to do?
There are other ETFs. One is called PSLV. It's run by Eric Sprott, and they are dealing with allocated silver. So rather than giving your money to JP Morgan Chase and assuming they're gonna run and allocate silver and put it away, and not just say, okay, we're borrowing against the silver we already own, and saying that it's part of the ETF now. Eric Sprott runs this fund and says, okay, well, he's very invested in the mining world, and what he'll actually do is say, okay, well, every ounce and bar of silver in this fund is allocated silver, so it's silver off the market rather than just be paper silver that sits on the balance sheet of JP Morgan Chase. So it's possible that running up the price of SLV, if you play options market and stuff like that, you might be able to pull some money out and take profits. But I still think you're leaving the upper hand in JP Morgan Chase's hands to try to manipulate and stop you out and push you around, because they're a big bank. People have been trying to highlight the price differential between gold and silver. Back in 2011, I believe, gold peaked out at about 1950 or 1970, something like that. And at that time, silver was right around $49. Today, gold is right around the peak where it was again. It actually broke it just recently in December, I believe. It went over $2,100. And silver is about 50% of what its all-time high was at $49.
Right.
So, one would think the two trade together, but, due to a massive short position in silver that's been held on for several years, and they keep on spoofing the market and running the price down, it never has a chance to gain traction. And, that's affected miners, that's affected, currencies. It's had a disastrous effects around the world. So, there is enough people get involved purchasing physical silver, JP Morgan Chase will be first to position, and they're not going to be able to manipulate the market anymore, because at some point supply and demand don't allow the price problem to continue, because investor demand has pulled all the silver off the market. And there's a lot for silver right now. If with the Joe Biden administration coming in, they're probably going to be going all in on promoting silver or solar panels have silver in them. Electric vehicles have a lot of silver in them. So in many ways it's a play on future demand exceeding supply, and suddenly it could go straight to the moon. But I think people of the younger generation are paying more attention to Bitcoin, and they're playing that game rather than recognizing this opportunity. If we could trade silver the way we were trading Bitcoin, things would be really different right now. So
so the lesson is buy physical silver, because if we all own it, they can't manipulate the market the same way they are when they own everything about what you've purchased, because they can manipulate it in any way they want. So something I've heard a lot this week is, this is late stage capitalism. This is the inevitable outcome of what you get. Whether or not it is true capitalism, like people like you and I would say, it is not. A lot of people are saying, you sound like socialists who say real socialism has never been tried. So what's the difference? This is the inevitable outcome. What would you say to that? To me, this is late stage cronyism, government involvement in the markets that's led us to this place, that's led to all this centralization. What do you think?
All right. Well, I would say that it's been, true laissez-faire capitalism hasn't been tried in the United States for a very long time now. And when the government has been picking winners and losers and, running their own agenda on the markets, it's hard to say what our economy could be like had the free market had a lot more control.
Yeah, for sure. Well, I know you're starting a YouTube channel, or a podcast, you've kind of got the ground laid for that. If you guys liked what Mike was saying here and you found it interesting, Make sure to go check them out. Where can we find you? What apps are you on, or where you're on YouTube, or what's?
If you go on to Stitcher or Anchor or I think iTunes, I think it's on all of them right now. You just search for "I Am Just a Truck Driver."
All right, perfect. Well, we'll keep an eye out for you, and we'll definitely have you back on. You're my most consistent guest. Thanks for coming on again. Stay safe on the road.
Yep, no worries. Yep, be safe out there.